In the 21st century, power is no longer found in the halls of Parliament or the bunkers of generals. It is found in the flow. As of January 2026, BlackRock has shattered every record in financial history. They manage a staggering $14.04 trillion in assets. To put that in perspective, if BlackRock were a country, its economy would be the third largest on Earth, trailing only the US and China. If you look at the top shareholders of Apple, Pfizer, ExxonMobil, or Lockheed Martin, you find them. If you look at the banks that lend you money, or the media that tells you the news, they are there. They are the permanent shareholder, a company that owns the world, yet whose CEO, Larry Fink, operates with the quiet precision of a ghost. This is the gilded truth of the shadow government. Every empire has an origin story, and BlackRock's is born from a humiliation. In the early 80s, Larry Fink was a star at the investment bank First Boston. He pioneered the mortgage-backed security, MBS, the very financial instrument that would later break the world in 2008. But in 1986, Fink's department made a massive unhedged bet on interest rates. In just 3 months, he lost $100 million. The boy wonder was unceremoniously fired. Fink didn't just want to return to Wall Street, he wanted to fix it. He realized the fatal flaw in finance wasn't bad luck, it was bad data. In 1988, under the umbrella of the Blackstone Group, Fink and 7 partners founded BlackRock. Their mission wasn't just to invest, it was to see the risks that everyone else missed. They built a crystal ball out of cold, hard silicon. They called it Aladdin. Aladdin stands for Asset, Liability, Debt, and Derivative Investment Network. While most people focus on BlackRock's $14 trillion, the real power lies in this software. Aladdin is the central nervous system of global finance. It uses massive pools of historical data and Monte Carlo simulations to run millions of what-if scenarios every second. It calculates how a hurricane in Florida, a coup in Africa, or a pandemic in Asia will affect a single bond in London. BlackRock doesn't just use Aladdin for themselves. They license it to their competitors. Today, Aladdin monitors over $21 trillion in assets for thousands of external clients, including the world's biggest insurance companies, pension funds, and even national central banks. That means one single computer system controlled by one private company oversees the risk management for roughly 10% of all the world's financial wealth. Aladdin isn't just a platform, it's an information monopoly. If Aladdin miscalculates, the global economy doesn't just stumble, it stops. Coming up next, the circular ownership loop, how BlackRock, Vanguard, and State Street became the three-headed hydra that owns every industry you care about. In a traditional capitalist system, companies are supposed to be at each other's throats. Pepsi should want to destroy Coca-Cola. Ford should want to bankrupt GM. This competition is what keeps prices low and innovation high. But as we move through 2026, that version of capitalism is dead. It has been replaced by common ownership. If you look at the S&P 500 today, BlackRock, along with its 2 siblings, Vanguard and State Street, known as the Big Three, are the largest shareholders in 88% of all the companies in the index. They don't just own the winners, they own the entire stadium. When one company owns significant stakes in every competitor within an industry, the incentive to compete vanishes. Economists call this horizontal shareholding. If BlackRock owns 8% of United Airlines and 7% of Delta, they don't want a price war that lowers ticket costs for you. They want both companies to maintain high margins, to maximize the value of their total portfolio. You aren't seeing a free market. You are seeing a cooperative masquerading as a competition. The most frequent question asked is, who owns the people who own the world? This is where the gilded truth becomes a hall of mirrors. As of early 2026, the ownership structure of these giants is a closed loop. Who is the largest shareholder of BlackRock? It's Vanguard, holding roughly 9%. Who is the largest shareholder of State Street? It's Vanguard and BlackRock. And who owns Vanguard? Vanguard is client-owned. meaning it is owned by its own funds, which are heavily populated by BlackRock and State Street assets. This is the financial Ouroboros, the snake eating its own tail. These three firms manage a combined $25 trillion. They aren't just investors, they are a unified financial nervous system. They own each other, they vote for each other's board members, and they ensure that no outside force can ever disrupt the loop. This isn't just a monopoly. It is an impenetrable fortress of capital. In the past, a CEO worked for the board, and the board worked for the shareholders. But today, the shareholder is a computer algorithm in New York. BlackRock and Vanguard are permanent shareholders. Unlike activist investors who buy a company to change it and sell it, BlackRock never leaves. Because they manage index funds, ETFs like IVV, they must own the companies in that index forever. This gives them terrifying leverage. Every year, BlackRock's investment stewardship team votes on thousands of corporate resolutions. They decide who gets to be on the board of ExxonMobil, how much the CEO of Apple gets paid, and whether a company should prioritize climate goals over short-term profits. If a CEO ignores Larry Fink's annual letter, BlackRock doesn't sell the stock, they vote out the board. The Big Three now control about 25% of all voting shares in the United States. In any election, that is a supermajority. The CEOs of the world's biggest companies are no longer the bosses. They are middle managers for the shadow government. Coming up next, the fourth branch of government. How the US Federal Reserve handed the keys to the kingdom to BlackRock during the 2020 collapse. In March 2020, as the pandemic paralyzed the globe, the US financial system was on the verge of a total cardiac arrest. The Federal Reserve needed to inject trillions of dollars into the economy. But they had a problem. The Fed is a central bank, not an investment firm. They didn't have the technical plumbing to buy thousands of individual corporate bonds to keep companies afloat. So, they called the only person with a big enough pipe: Larry Fink. The Fed hired BlackRock to manage three massive bailout programs. Essentially, the US government handed BlackRock the national checkbook. This created a conflict of interest unparalleled in history. BlackRock was tasked with buying corporate bond ETFs to stabilize the market. The problem? The largest and most liquid ETFs in that market are owned by BlackRock itself, under their iShares brand. For months, BlackRock used government-backed money to buy its own funds. While they waived certain fees to appear neutral, the move solidified their dominance. They became the fourth branch of government, a private company, with the power to decide which corporations survived and which died, all while using their own software, Aladdin, to track the very market they are now controlling. Once you control the money, you control the behavior. Since 2020, Larry Fink has used his annual letter to CEOs to enforce a new global standard: ESG, environmental, social, and governance. Through ESG, BlackRock has become the world's moral arbiter. If a company doesn't meet BlackRock's specific criteria, ranging from carbon emission targets to the ethnic makeup of its board, Aladdin can trigger a sell signal, or BlackRock can vote to oust the company's directors. By 2026, this has evolved into transition investing. BlackRock is no longer just rewarding green companies. They are forcing brown companies like oil and coal to fundamentally change their business models or face a total loss of capital. Critics call it a private social credit system, a way for unelected billionaires in New York to impose political and social values on the rest of the world without a single vote being cast. Whether you agree with the goals or not, the reality is undeniable. BlackRock doesn't just manage your money. They are managing the very definition of what a good company is allowed to be. Coming up next, the Gilded Verdict. In a world where one company owns the data, the debt, and the moral compass, is there any room left for the individual? In 2026, the shadow government has found its ultimate weapon: artificial intelligence. Larry Fink has explicitly stated that he sincerely believes there is no AI bubble. Why? Because BlackRock is the primary financier of the infrastructure that makes AI possible. BlackRock isn't just buying NVIDIA chips. They are buying the power plants, the data centers, and the cooling systems required to run them. Through their iShares AI Innovation and Tech Active ETF, by which has surged past $8 billion in assets. They have integrated themselves into every layer of the AI tech stack. But the real gilded truth is Aladdin wealth. This is the version of their supercomputer that now sits on the desks of private wealth managers. It doesn't just manage institutional risk. It predicts your financial behavior. By controlling the data that feeds the AI, BlackRock is ensuring that the algorithms of the future are written in the language of their own interests. BlackRock's 2026 outlook is defined by a single phrase: micro is macro. In the past, government policy dictated the economy. Today, the capital spending of a few megacorporations directed by BlackRock is so massive it has the weight of national policy. BlackRock predicts that between now and 2030, $5 to $8 trillion will be spent on AI-related capital expenditures. Because they control the flow of this capital, they have become the de facto ministry of planning for the global energy transition. When BlackRock decides that defense is now a socially responsible investment, as they did in 2025, national defense budgets across Europe and the US shift to accommodate them. They have reached a level of power where they no longer lobby the government. They simply outspend it. As of February 2026, BlackRock's AUM sits at a staggering $14.04 trillion. Larry Fink has built a monolith that is now the financial nervous system of our species. Critics warn of a fragile market equilibrium and the diversification mirage where we think our money is spread out. But it all eventually flows back to the same 3 server farms. But for Fink, this is simply the ultimate fulfillment of his 1988 dream. A world where risk is quantified, controlled, and owned. The gilded truth is that we don't live in a world of governments and citizens anymore. We live in a world of assets and managers. BlackRock has achieved a state of permanent victory. They own the debt, they own the data, and they own the transition. The question is no longer whether they own the world. The question is, in a world owned by an algorithm, what is the value of a human choice? This has been the Gilded Truth.